So there's a lot of fuss in the financial markets at the moment about the Swiss National Bank and their decision to unpeg their currency, the Swiss franc, from the euro. Now, here is an article from the original pegging, if you like, in September 2011, and it announced proudly that the Swiss National Bank has fixed its currency against the euro at a rate of 1.2 Swiss francs. Now, why did it do that? And they say that the Swiss franc is massively overvalued and that poses a threat to the Swiss economy. So, what have they just done? Well, they've just unpegged it. Now, this is really strange. And why is it strange? Well, first of all, it breaks the whole globalist agenda of the national banks, the central banks. Now, they're the first bank to break ranks. It also blows a hole in the main reason that they stated for refusing the gold referendum, which was it would make it impossible, if they converted to gold, to maintain the peg to the euro. Well, they've just abandoned that. So what was the real reason for refusing the gold referendum? Could it be that the Swiss really don't have any gold either? I don't know. But it also goes against what they said previously. The current massive overvaluation of the Swiss franc poses an acute threat. Well, they wanted to prevent deflation. What has just happened? Massive deflation in the Swiss franc, because the Swiss franc has surged, as it says here, by as much as 38% against the dollar. Now, there's people who think that this is all in Europe and this won't affect the dollar. However, I've got some news for you. This is the US dollar index, and basically it measures the strength of the US dollar against other currencies, a basket of other currencies. And if we go along, and all of a sudden when this decision is announced, you just look at the amount of variability there is on pricing. It's massive. And the market can't make up its mind. Is the dollar going to fall? Or is the dollar going to rise? Or is it going to settle back about where it was? So this has had a big shock in the dollar. There's currency traders who've lost billions. There's currency traders who've made billions. So yes, it does have a big effect. But here's a rather unfortunate thing, and that is that this US dollar index, which is used by an awful lot of people, is actually measuring the US dollar against some quite weak currencies, because the euro currently is the lion's share of that basket of currencies. Now let's have a look. This is the euro, US dollars per euro, and as you can see, the euro is sinking like crazy. And here is the euro over the last few days, and I'd like you to try and guess where it was that the Swiss announced their decision to decouple their franc from the euro. It was here. And those who knew about the information early quickly sold off all their euro assets. Surprise, surprise. And then people who didn't know about it were wondering, what's all the fuss? Gosh, euro's gone down, it's undervalued, I better buy into euros. And then they lost their shirts. This is typical of what happens in a big currency move. Those who know something sell out, those who don't think they've got a bargain. But anyway, the euro, as you can see, is very weak. Now, this is, I think it's 29% at the moment of that currency basket. It's the biggest figure for sure. Now, if you look at, compare this euro graph, and let's see what happens pound sterling. And here we are, pound sterling, and you can see it's affected, it's affected the dollar to pound, and the dollar has in fact gone down against the pound. It hasn't stayed level, it's gone down. And this is because the pound is a much stronger currency currently than the euro. So it does have quite a major effect. What's it done to gold? Well, those of you who have studied gold prices recently will know that over the last 3 months gold has started to recover. It's recovered quite a lot. It's moved from around about 1140 to 1260 in 2 months. That's about a 10.5% move, which is pretty big. And similarly, silver has moved 1534 to $17, which is about 10.8%. And pretty much immediately you can see that this is going to have a big effect on world finances for just that reason. Now, if we look at just the last month, you can see it's pretty relentless move upwards on gold over the last month. So suppression seems to be dying out, and the euro also seems to be dying out, and Russia in May are going to launch their own alternative to the Western SWIFT banking system, and this will have a huge impact on world finance and also to some industries. And people don't realise this, but SWIFT has actually put the brakes on some industries like pornography and gambling, and they're heavily restricted by SWIFT rules. Now, those rules are not expected to be implemented in the new system, and this is going to mean, because we all know how popular pornography and gambling are, this is going to mean a big surge in early adopters for using Russia and China's new system. Now, this article here says it's from RT, and it says that it's already launched. Well, it's not launched, it's just been announced. There's a bit of a problem here with language, I think. And it says here the new service was launched. Well, it's not been launched, it's been announced. It actually goes into full operation around about May. And it has nothing whatsoever to do with Western banking. And this is a big move because, again, it's a part of the move away from the dollar. So this is going to put more pressure on the dollar, which at the moment is being propped up by currency speculation. And I would suggest that the reason that gold is rising is that the banks have taken to propping up the dollar instead of pushing down gold. So there we go. This is the roundup of what's happening at the moment in the relevant markets to gold and silver, and also to the dollar. And it's continued the theme that things are not looking too good for the dollar. Yes, it's been soaring, but why has it been soaring? And most suspiciously, the dollar's been soaring at the time when gold has also been going up. And if you think about it, gold has been going up against the dollar. So this actually means that you can add the increase in value of the dollar to the increase in value of gold. And if you take that into account as well, you can put another few percent in reality on the value of gold. Well, I hope this has been of great interest to you and has set you right on a few things. And please like, share, and of course subscribe. Thank you.